Hello and welcome to this Wealth of Advice market update recorded on the 23rd of February 2024. Thankfully, from the last market updates that we recorded when things were starting to pick up and be positive again, thankfully that's continued into the new year. So as we approach the end of February, we now have almost 2 months worth of data for the start of 2024, and as I say, things have been positive since we ended October, which was a very negative, pessimistic time, and markets have started 2024 strong. There is resilience coming through in all the economies. Yes, you may have read that the UK entered a period of recession last year, but it wasn't a deep recession, it was very slight. It hasn't caused market sell-offs, it hasn't caused asset prices to go down. The fact of the matter is global markets, global stocks and shares markets are primarily driven by what's going on in the US stocks and shares market. Therefore, the US economy is vitally important to everything that we discuss. Productivity coming out of the US is really good. The number of new jobs that are being created in the US has continued to remain high. That, believe it or not, was a bit of a worry because there was a fear that if the US continued adding new jobs, that would have been inflationary. But they've managed to navigate through that with their rise in interest rates, getting to a point where we have brought inflation under control. There is now an expected 97% chance of an interest rate cut in May. However, the central bank is still saying that the data remains important. We need to analyse that. They don't want to get the markets too excited. But the markets did get excited at the end of November, December. It's why they rose so much there and why they've continued to rise in the new year. Overall recession risks in the US have diminished, with GDP growth in the last quarter of 2023 at 3.3%, which was much higher than what anyone had expected. So it's good that even with the rise in interest rates, the US economy has continued to grow, and as I say, that's positive for all markets around the world. So just following on from that little line I put in there saying that the UK did enter a recession in 2023, obviously markets are doing very well, really positive on things at the moment, but we can't just sort of skip past this without mentioning it. And what is a recession? Technically, it's 2 consecutive quarters of GDP contraction. That's gross domestic product, which is our total output. This didn't come as a surprise to markets. Markets remained largely unaffected, but as you can see, it was minus 0.1% in quarter 3 of 2023 and minus 0.3% in quarter 4 of 2023. So very small amounts. As you can see, when we look at the business cycle there, where we have recession, they can lead to depression where things get really bad. So it will be interesting to have a look at what the GDP figures are for quarter 1 2024, which will obviously be end of March. So we'll probably read or see those figures at some point in April. But if it is a small contraction, don't be surprised for that. The chances are people are out spending, things have been okay, inflation's coming down, it may be more positive than we think. And if that was the sum total of the recession that we had, then the markets won't even really be bothered at all. It should be said, recessions are a very natural part of the business cycle. Same way we have peaks, we have troughs. So you will always have recessions throughout history. Older clients watching this might remember some of the terrible recessions of the late 1970s. There was a bad one in the 1990s. We're nothing like that. As I say, 0.1 and 0.3% down over the last 2 quarters is nothing at all in comparison to what those were. Another major part of the world where investments will look into is emerging markets. China obviously dominates emerging markets. So although we say that the US obviously is the most important stock market, the most important economy for how stock markets perform, what goes on in China will have an impact. China had 3 years of lockdown after COVID. They only actually started to reopen fully January 2023. So China's a huge economy. So all the way through 2023, it's how they get their economy reopened. And China's economy has faced lots of ongoing problems. President Xi has vowed to try and sort of solve this. He needs to keep his job. There's an anti-corruption agenda on the cards, which kind of means that lots of people seem to disappear over there. But a big problem in China is property prices have fallen massively. We did an update about 2 years ago where there was a huge company in China which kind of backed a lot of the big property deals was going to go under, and that did spook world markets. Well, that company actually went into administration last month, and it hasn't really spooked markets, and markets have held up okay. But the Chinese authorities are aware that they need to stabilize things, and they're actually buying their own stock market. They're pumping money into the system to do things to keep that abreast and keep it afloat. So hopefully that situation starts to improve. So if by the end of this year we have an improving situation in Asia, the US market continues to grow well, we've got a general election coming up in the UK, general election in the US. Obviously, we need the situation in Russia and Ukraine not to escalate and cause major problems. Same with the Middle East. But overall, we've started the year positive, and hopefully that continues for a good number of months yet. And as I say, I'm certainly a lot more confident now than what I was back in October. And as I say, let's look forward to some good numbers, hopefully coming in this year, with the obvious risks that we don't know what some of these crazy politicians might do later down the line. So talking about America and their stock market and how important it is, this was some really good news that came through just a couple of weeks ago. The S&P 500 reached an all-time high and went above 5,000 for the first time in its history. You can see on the chart on the screen now, it got very close once or twice to getting to 5,000, but thankfully on February the 15th it went above there, and it's kind of stayed above there ever since. This is very, very important. It took 41 years for the S&P from when it was formed to reach the 1,000 milestone in 1998. It then reached 4,000 in April 2021, so it's gone up another 1,000 points since then. So if you look back at when markets started to collapse at the end of 2021, the S&P 500, dominated by those huge big companies that we always mention, your Microsoft, your Apple, Google, Tesla, Netflix, Facebook, all these big huge companies dominate there. So they really are driving up world markets. So we hope obviously this continues, but it was a really good thing to see that this key index has gone above 5,000 for the first time. So client review meetings, thankfully a lot more positive now, obviously with markets going up over the last few months. We had our client conference seminar at the Durham Cricket Club at the end of January. Thankfully that was another positive afternoon. Almost 100 clients attended that, so thank you for all those people who came. The question that we're now kind of asking when we're looking at investment experts, are we now back into a bull market? So let's explain. What is a bull market? A bull market is where a stock market rises by 20% from when it reached a low point. A bear market is when a market drops by 20% from its high point. So the bear market that we entered into last time round was around about the 4th of January 2022, when the S&P reached 4,797. As you can see, markets then fell almost all the way throughout 2022, but they actually reached their worst point at the end of October 2022, and the maximum fall that was seen over that period was around about 25%. If you then look at how the graph has kind of come back, there's been some ups and downs along the way. And again, when I said earlier that when we got to the end of October 2023, things were feeling a little bit depressed again, because markets had reached a nice high point at the end of June. Obviously, I did a market update where I said things are feeling quite positive. We then had a negative July, a negative August, a negative September, and a very negative October. But you can see the bottom of the graph there, when we got to the end of October 2023, we've then had a good run since. And as you can see, with the S&P 500 going above where it was on the 4th of January 2022, we're now able to say that the end of the bear market has been reached, and we're now on a point of entering a bull market territory, which is a scary thing to say when we've had so much volatility, and you try not to jinx things and hoping that markets don't go down again. But we have had such a good run on the markets, and this is obviously the S&P 500. It doesn't apply to the FTSE 100 or the FTSE All Share, for instance, but with the S&P 500 being such a big dominant market, it's the one that people look at, and it is interesting to see, or pleasing to see, that we are now back out of that horrible bear market territory. So hopefully, following on from the chart we've just seen there, we can all agree that we are now at the end of what was quite an awful bear market, very volatile, lots of ups and downs on the way. The next obvious question that you might ask is, well, if we're now entering a bull market, how long does a bull market tend to last for? And thankfully, as this chart on the screen shows you there, the average bull market lasts for 4.8 years. So I'm sure, just for my sanity and all the clients watching this, if we can have 4.8 years of market growth, we will all be much, much happier people. However, life is not as easy as that. As you can see on this chart, there will be shorter bull markets and there will be ups and downs along the way. So with any investment portfolio, you are going to see steps forward, step back. But again, I totally believe that all of our portfolios, the Royal London portfolios, Prudential, Legal in General, all the different sort of solutions that we use have got the correct asset allocation in them. They all look quite similar in the fact that people are overweight in the US, a little bit less in the UK with uncertainty what's going on here. But the general consensus is we've getting over COVID, we've getting over that inflation bomb. Hopefully we're now out of a bear market and into a period of time when markets will grow over the next couple of years. 4.8 years, I would definitely be happy with that. Can I be greedy and ask for the 12.3 years that we saw? The second or third big one from the end there. The one from 2008 onwards was a long bull market. But as I say, you can see some quite shorter ones, 1.7 years, 2.6 years, 2.1 years. The fact of the matter is we don't know. However, the average, the S&P 500 has increased over a bull market that's lasted just under 5 years is 164%. Other little positive tidbit to take from this update, we've had a positive start to 2024 for UK house prices. Obviously, in the UK, the value of someone's house is very, very important for their own personal wealth. So it's good to see that after we saw house prices come down at the back end of 2023, they are coming back up. That's the Halifax House Price Index that we're showing there, where it says the typical UK home now costs £291,029, which is £3,700 more than it was last month. Why is this happening? Well, there is the expectation that interest rates in the UK will come down in the summer, so therefore consumer confidence in the property market has come back. You've also got situations going on where some of the big house builders emerging. Barratt Homes recently bought Redrow in a merger deal that was worth £2.5 billion. That wouldn't be happening if the property market was going to crap. And obviously we are aware that we have a shortage of properties in the UK, so there is a lot of developments going on. But definitely a little positive tidbit to take from what 2024 started like. We move on to the final part of the presentation where we look at how different markets have performed so far. As I say, performance of year to date, we are only 7 weeks into 2024, but it is positive to show that even the FTSE 100 there, right at the bottom, which was in negative territory just until a few days ago, is up ever so slightly, 0.05%. The S&P 500, the most dominant market that we keep mentioning, is up over 5% year to date. The MSCI World Index, which is a basket of all world indexes clubbed together, is showing that it's positive over 4%. When we look at these market indexes over 12 months, the S&P 500 is up 16.89%. Has come down a little bit in the last couple of days. It has been a bit of a sell-off because it was obviously slightly higher than that, but nothing to worry about. As I say, FTSE 100 there just kind of breaking even over 12 months, and the MSCI World Index up 13.6 over a year. Look at it over 3 years. Remember, the FTSE 100 did very well after COVID when oil prices and such like went up. So the S&P 500 is winning again, 45% over 3 years, but the FTSE's up 30% over that period. And then over 5 years, there's no competition really compared to where the FTSE is to the S&P 500. The MSCI in the middle there up 75.93, and the S&P up 95%. This is why you see your portfolios having more in the US, in Europe, in Asia, a little bit less in the UK. There will be a general election in 2024. We were at the Citywire event in London a couple of weeks ago where there was a professional political analyst talking. He predicted that the general election will be some point in October. He also predicted that the Conservatives will take quite a beating in that. There was some by-elections last week where they had some quite heavy defeats. Who knows what the next political regime will bring, whether it be positive for markets, but certainly right now most portfolios are positioned with a very small percentage in the UK because there just isn't that growth there isn't that confidence in the UK stock market, and this is why, as you can see from this chart, that we invest in the S&P and other overseas stock markets around the world. So thanks again for listening to another Wealth of Advice market update. Hopefully yourselves are feeling as positive as I have been over the last few months. Markets are picking back up, fund values for clients are going back up. But as ever, if you have any questions, queries, concerns, please don't hesitate to get in touch. And as I say, we'll record another one for these in a few weeks' time.